BlackRock's unexpected filing for a spot Bitcoin exchange-traded fund, ETF, sent shockwaves through the financial world. The move marked a significant shift for the prominent asset manager, which had previously faced years of rejection from the U.S. Securities and Exchange Commission, SEC, regarding Bitcoin ETF strategies. The timing of the filing, coming shortly after the SEC's lawsuit against Coinbase and Binance, added to the intrigue, especially considering BlackRock's partnership with Coinbase. The potential impact of BlackRock entering the Bitcoin market cannot be understated. As the largest asset manager globally, BlackRock's involvement would bring immediate legitimacy to the Bitcoin market, which has been in need of a facelift. Currently, the market is flooded with high-fee and imperfect Bitcoin ETFs that have faced scrutiny from the SEC. The introduction of an iShares spot Bitcoin ETF by BlackRock could provide a much-needed boost. However, investors should carefully consider whether they should buy into such a fund, given the high volatility and uncertain future of Bitcoin. Unlike traditional investments, Bitcoin lacks a fundamental value that investors can rely on. Therefore, this consideration should take precedence over other factors, including the fund structure. In assessing where a spot Bitcoin ETF would fit among existing offerings in the U.S., it's essential to understand the current landscape. The Bitcoin ETF market comprises three main types of funds: grantor trusts, futures-based ETFs, and Bitcoin-adjacent equity funds. BlackRock's proposed spot Bitcoin ETF would create a fourth category, as it does not fit neatly into any of the existing options. Grayscale Bitcoin Trust, GBTC, with its ticker symbol GBTC, currently represents the largest Bitcoin offering in the U.S. However, it operates more like a closed-end fund than an ETF. As a result, investors have experienced significant premiums and discounts in its price compared to its net asset value, NAV, which are unrelated to Bitcoin's performance. In contrast, an iShares Bitcoin Trust would offer continuous offerings, allowing authorized participants to create and redeem shares at NAV at any time. This feature would help maintain the ETF's price alignment with its NAV. GBTC, on the other hand, does not allow redemptions, leaving investors with the option to sell at the prevailing price, which is currently heavily discounted. Compared to futures-based Bitcoin ETFs, a spot Bitcoin ETF would provide a better means of tracking Bitcoin's price. Futures-based funds aim to hold front-month futures contracts, which expire monthly, requiring portfolio managers to roll into the next month's futures contract. This process often incurs additional costs for the fund, unlike a spot Bitcoin ETF that wouldn't face such expenses. Additionally, the Chicago Mercantile Exchange, CME, where Bitcoin futures are listed, imposes position limits to prevent any single entity from gaining excessive control over the market. If these limits are breached, as occurred in 2021 with the ProShares Bitcoin Strategy ETF launch, portfolio managers must purchase longer-dated futures contracts, which tend to have less accurate tracking of the asset spot market. Apart from improved tracking capabilities, a spot Bitcoin ETF from BlackRock would likely come with lower fees compared to existing options. Grayscale charges a 2% fee, while the ProShares Bitcoin Strategy ETF charges 95 basis points. This aspect represents a significant opportunity for improvement for investors once BlackRock's spot Bitcoin ETF enters the market. The question that arises is why BlackRock has chosen this particular moment to file for a Bitcoin ETF. While more than 30 previous filings for spot Bitcoin ETFs have been made in the past, this marks BlackRock's first entry into the space. One possible reason for the timing could be the impending decision on Grayscale's lawsuit against the SEC regarding the rejection of its spot Bitcoin ETF application. Alternatively, BlackRock may believe that it has developed the right surveillance approach to address the SEC's concerns regarding Bitcoin market manipulation. The true motivations behind BlackRock's filing remain unknown, and observers eagerly await further developments. BlackRock's application for a spot Bitcoin ETF has inadvertently had a positive effect on Grayscale investments. The Grayscale Bitcoin Trust has outperformed the cryptocurrency itself since the filing, resulting in a narrower discount between the trust's price and its underlying Bitcoin holdings. Despite being a potential competitor to GBTC if approved, BlackRock's filing has raised hopes that the SEC might reconsider its stance on physically backed Bitcoin ETFs. The mere fact that BlackRock, with its size and reputation, has made this move has restored faith in the possibility of approval. Since the news of BlackRock's application broke, GBTC shares have surged approximately 23%, outpacing Bitcoin's 8% increase during the same period. Grayscale is currently engaged in a high-profile legal battle with the SEC. Last year, the asset manager sued the regulator after it rejected Grayscale's application to convert GBTC into a physically backed ETF. Converting GBTC into a spot Bitcoin ETF would address a persistent issue for Grayscale, namely the trust's discount. Unlike an ETF, GBTC cannot redeem shares to align with fluctuations in demand, leading to a significant discount relative to its underlying Bitcoin holdings. The renewed interest in spot Bitcoin ETFs has prompted a flurry of new applications. Invesco Limited and WisdomTree recently submitted their applications for physically backed Bitcoin ETFs, following BlackRock's lead. Despite the SEC's historical rejections, BlackRock's involvement has sparked optimism that the regulator might reconsider its stance on this type of ETF. The size and influence of BlackRock in the financial industry make its move a significant development, attracting the attention of other issuers and intensifying the Bitcoin ETF race. However, it remains uncertain whether the SEC will ultimately approve a spot Bitcoin ETF. In conclusion, BlackRock's unexpected filing for a spot Bitcoin ETF has generated excitement and speculation within the financial community. If approved, such an ETF would bring credibility and legitimacy to the Bitcoin market, which currently lacks a reliable investment vehicle. Additionally, it could lead to improved tracking capabilities, lower fees, and increased competition among existing offerings. The timing of BlackRock's application, as well as its potential implications for Grayscale and the broader ETF landscape, have added further intrigue to this evolving story. Investors and industry observers eagerly await the outcome, as the SEC's decision on BlackRock's proposal could have far-reaching implications for the future of Bitcoin ETFs.